What's up everyone, Dane the Mortgage Guy here with another 3-Minute Thursday video just for you. So today I want to talk to you guys about something that makes majority of people, most everyone groan really loudly when they have to see this number or even have to pay this number because nobody wants to pay these things, and those are closing costs. And to be honest, they're not that scary. They just sound really scary, and I'm here to break that down. Now, full disclosure, I don't know if I'm gonna actually do this video in under 3 minutes, so buckle up, we're gonna make it happen. Now, before we get into the nitty-gritty of closing costs, I want to give you 2 reasons why closing costs matter as much as they do. Number 1, people don't work for free, okay? There's a lot of people that touch your file throughout the entire mortgage process, and those people have to get paid, or else we would all be volunteering and nobody would ever volunteer to do those jobs because they are stressful, and I don't blame them. And the second thing, because of what happened from like 2006 to 2008, where people weren't disclosing fees at all, and it screwed the US economy, we, being mortgage loan officers and lenders and everybody that's a part of the mortgage industry, now have to disclose every single thing that we are charging you for. And if it is not on the disclosure, then whoever that lender is done royally messed up. Also, if you don't know where your closing costs are, it's always going to be on page 2 of your loan estimate. Now, before we jump into this video, you know the drill. Clock Info Disclosures, amazing mortgage company, and closing costs explained in an attempt to do it under 3 minutes starts now. So, closing costs, let's get into them. There are 7 different sections of closing costs that are broken down. So I'm gonna break it down into 2 parts, and then I'm gonna break each part down. So you have your left side and you have your right side, okay? Left side equals 3 sections, A, B, and C. Section A, origination cost. Any cost that's listed under this section is a fee that is required to originate your loan. You're gonna see things such as underwriter fee or processing fee or loan origination fee. They're all gonna be in there, and it all depends on how the company that you're working with decides to word it, but it's all gonna be in section A. On top of that, you're also gonna see credits and discounts if you took a lower rate or if you took a higher rate or whatever. You're gonna see that number in section A as well. Section B, services that you cannot shop for. Everything that's listed under this section are all services that are required of a mortgage loan, such as an appraisal, a credit report. I have it over here on the screen, so I'm gonna look over here real quick. You got your IRX transfer fee sometimes, flood certification fee, tax service, VOE for verification of employment. These are costs that you cannot go out and try and find a better price on because these prices are set by the company that you're working with. Section C, services that you can shop for. Now, majority of the time, it's just title and escrow in this area. Now, there are gonna be other times where this is a fee that you are able to go and shop around and try and see if you can find a better deal. Do most people just stick with what's already on there? Yeah, because, you know, who wants to spend the extra time doing the work? But if you've got a title company that you really want to work with that you know is going to be a heck of a lot cheaper than whatever your loan estimate is showing, great. Let us know. We will get in touch with them and we will use them for your file, for your mortgage, because you're the customer. We want to obviously take care of you. And then you've got section D, which is literally just A, B, and C all added up. And that's all section D is. Now, let's talk about the right side. And we're gonna start with section E, which is taxes and government fees. Anything that needs to get paid to Uncle Sam, to the government, to the IRS, whoever is going to show up in section E. And it's really simple and basic, and there's usually only like 1 to 3 fees in there most of the time, but double check your loan estimate when you get it. Section F, prepaids. What are prepaids? Prepaids are you prepaying your insurance premium or prepaying a certain amount of interest for the rest of the month based off of the day that you're going to close. Those numbers are all going to change every single loan estimate. There's never going to be a flat number for the general public. It's always going to change. So just so you know, those prepaid amounts are covering your taxes, your insurance, your property tax, any interest that's being paid on the loan for the duration of the month that you're closing in. It all depends on multiple variables. which I don't have, so I can't really give you a solid number on those things. Section G, initial escrow payment at closing. I think I got that right. Ha! I did. Section G is basically just prepaid of your homeowner's insurance and your property taxes based off of multiple variables again, and it could either be 2 to 3 months of prepaids that you have to pay, or it could be 12 months. It all depends on the program, it depends on your credit, it depends on a ton of factors, so there's really no way to, like I said, give you a solid consistent number on that figure. It all depends on the program, it depends on your credit, it depends on a ton of factors, so there's really no way to, like I said, give you a solid consistent number on that figure. And then we have the last section, which is just section H, and that's just other. So anything that didn't qualify or didn't classify as sections A, B, or C, or E, F, and G, it's gonna go under H. Typically, you're gonna see something called owner's title insurance, which is an optional cost to you in section H. And what owner's title insurance is in basically the easiest way to put it is, if somebody were to challenge the fact that you own your house on the actual title, this would protect you from them being able to backdoor and potentially take your home. In the 13 years I've been doing this, I've never once heard or ever seen anybody actually have to utilize their title insurance. But insurance is insurance, and it's always good to have. And then you got section I, which is just E through H all added together, and then that is your section I. There you go. Did I do that under 3 minutes? God, I hope I did that under 3 minutes. See, closing costs aren't really that scary. Yeah, it's an expensive charge, but if you're buying a house, you can just ask your real estate agent to ask the sellers to pay your closing fees. It's a very common practice, and most sellers are kind of expecting it these days anyway. Now, if you're refinancing, you can just take those closing costs and then just roll them all into the loan amount, and then that way you don't have to worry about paying anything out of pocket except for an appraisal, and you're done. You don't have to worry about it. Like, it's all taken care of right there. It's easy, simple. Done. Anyway, you guys, that's closing costs explained in hopefully under 3 minutes. And if you have any other questions about the mortgage process, leave a comment down below, shoot me a message, send me a text, call me, whatever. I will do my best to answer that question under 3 minutes. And like I've said in the past, if I can't answer it, then I'll get somebody else that would stand like right here to be able to answer that question for you. As always, you guys, thank you so much for watching these videos. And if you haven't followed me on social media yet, please do so at Facebook, YouTube, and Instagram at dane.the.mortgage.guy. And I got a new website domain name because I'm doing a few changes to my business. And you can now check me out online at daneandco.com. I love you. I appreciate you. I hope you are having a phenomenal week. And I will see you in the next video. Cheers, everyone.